I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? Now we know historically the average return of Bitcoin, yearly return of Bitcoin is something around 200%. Right? But that's including when prices started going from a penny and then to $1. You know, what happens if you take out and use from 2012 to today? I think the average rate of return annually is something closer to about 120%. I would like to see that. I would like to know, actually. Take a look at some of these numbers. This just happens to be the first choice on DuckDuckGo for Bitcoin average yearly return. And it's 2017, 1300, 2020, 300, it's, 2019, 87, and 2018, 72. These two cancel each other out. You're looking over 4 years, 1600 divided by 4. You're looking at 400% a year. There you go. Mean annual return, 400%, right? Absolutely astonishingly. I mean, and then I went over here and looked at this Reddit thread, and they're showing the percent change for every year into Bitcoin. It's a couple of down years. 2022, right? Good chance it's a down year as well. That's what I'm expecting. Not being invested, whether that's worth it to you during these bear market years, it could have a significant change in your overall accumulation. That's for some more advanced stuff. So you can see, even if we did experience something like drastically diminishing returns, instead of 400% over the last 4 years, maybe we're looking something forward at like 200%. But even if we only get 70%, what happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over a 5-year period. But it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return over the next year annually in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. Really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today with $3,000, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimated 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. And now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything can happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's, from here on up, you go on, borderline ridiculous for a 12-year plan. So, but, 70%, 12 years, next 3 halvings, you're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. Bitcoin log chart. Listen, look, it was very clear. We were never at a point where it was time to take action. It wasn't an accumulation stage. The true trend was not oversold, red below the 0 line. You could see these areas on the chart when you would be accumulating. And then you got this area over here. It wasn't an accumulation area at all. And it wasn't a take profit red area as well. Neither one of these events had taken place. And we were just mid-cycle. Mid-cycle. Plan was to hold, sell at cycle peak. That's the game plan. That's the strategy. However, something different unfolded. A 50% drawdown, mid-cycle. That led me to dollar cost averaging. I believe that, buying Bitcoin in this area and selling Bitcoin somewhere potentially in this area within a period of 6 months, that feels like a risk to reward that I want to participate in. I feel good about that. I deviated from the plan. The plan wasn't to do anything with my spot Bitcoin from positioning in, at the appropriate time to be accumulating Bitcoin, right? Until we got to the next top over here. So I bought Bitcoin. This was a place I was trading Bitcoin heavily, right? This was a place that I took out loans against my Bitcoin to buy more Bitcoin on the breakout from the whole entire bear market. The correction was over. Breakout, retest, resumption off. That was a place that I personally, on my BlockFi, borrowed against my Bitcoin. You could do it at other places like Coinbase. You should not do it unless you know exactly what you're doing and the risks involved. You could lose everything. Make sure that if you're doing something like that, it's a good idea to have the collateral aside so that need be, it could be posted. You don't want to get liquidated. You can never get liquidated. And experts only. I mean, that doesn't mean that you cannot venture down a rabbit hole and begin learning, but do not implore any advanced expert strategies unless you yourself know that you're an expert and you understand what the risk is you're taking on and how you're managing that, and that you can lose everything. I myself did that. Am I doing that again? No. There's no need for me to do that. I'll be trying to sell that at the top. I'm not going to go ahead and leverage up over here mid-cycle, but buy more spot Bitcoin. Yeah, I'm deploying multiple strategies. You have to think each one out.
Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not.
And that's what it is. You have to see things differently. CTM teaches us all what? To look at life, to look at the way we think, to think critically, to look at things differently. Right? It is the core and essence of what we teach and what we learn here, working together, always looking to learn. Before we look at this, by the way, good morning. Good morning, everyone. So glad to be here with you all. Mic check, mic check. What's going on, everybody? This is Jordan with Conquer Trading and Investing. What a beautiful day. What a beautiful moment to share with all with you. What a beautiful opening and how appropriate. for myself, which is why I share it with you. We're going to talk about that before we look at the charts and look at what is developing here right now. And yeah, this is a really important area. It's the next most important area since we broke out of that descending wedge over here, and we called it breaking out what could transpire. Now we're at the next checkpoint. We're going to get a good look at it. Before we do, let's talk about those different ways to leverage Bitcoin at different points in time and why. I showed you the BlockFi is looking a little bit better this month. You could see that we put up, a 15% gain, and all of a sudden it's starting to look, the last 3 months have been what? It's been sideways, price action, down sloping, and an accumulation place. I bought the dip. Right? Not taking out any type of loans against any of my collateral as at the beginning of the bear market. By the way, this started with a total investment of $52,850, right? $52,850 during the accumulation stage of Bitcoin before we broke out to the bull market, right? That over here, this was not a 1 month loss of $300,000. That was for Bitcoin withdrawn, taken out of over here, put into cold storage, right? And now we're over here and I bought the dip, right? What does that mean, right? What happens if forget starting with $3,000? What happens if you're starting with $52,850? Do you think we're going to have a 70% return this year? Do you think that from where we are right now, mid-cycle into the close, we're going to have a 70% return? Or probably something more like, we had from mid-cycle in 2013 to the peak, we had an 11x return. In 2017, from mid-cycle into the peak, we had a 7x return. Do you think that means we have a 9x return? We've been averaging both cycles. I mean, it's completely possible. It's completely possible. We'll figure it out, but it's not 500. But it's not 52,850, is it? Right? That's not where we're sitting over here because we are mid-cycle, right? So we're looking at like $260,000, right? So $260,000, right? With another potential 8x. I mean, is it possible? How do I get this thing to compute? All right? Let's see. Oh, we're missing zeros there. That's why. How do we get this to compute? Right? Well, you got to pay taxes. Right? Well, you have to pay taxes. Let's just I'm going to call it, instead of even calling it what it's going to be above, in my opinion, right? And that's, hold on one second, stick with me. And that's, call it $1 million. Let's call it $750,000 after taxes are paid, using what I believe to be a conservative estimate of where this bull market's going to peak out. And then all of a sudden I'm saying, okay, back to my plan. What's happening over the next 12 years with a 70% return? Is that 7 million? No, it's only 750,000. Are you guys doing the math? Have you been doing the math? Michael, listen, now with what I just let you know over here, all right? Listen to Michael over here for 1 minute, explain what's going on.
The best thing to do is if you're not going to hold it for 4 years, don't buy it at all. Because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever. And if you can't be forever, look out 10 years. And then you won't have the anxiety.
There you go. Look at 10 years. 12 years smarter. Why? 3 halving events and 1 more bull market. So don't look at this at least for 10 years. At least look at this for 12 years, right? Now, for sure, many people after 5 years, will you ever sell it? And that brings us back over to him. Michael just said, like, if you're ever going to sell it, he knows the answer is never to sell it. Would you ever sell it if this is the trajectory that you're on? And if you're not on this trajectory, what are you doing? Right? That's why you're here today, because starting with something even small, right? Starting with $3,000 today and then adding $3,000 a year and doing that for the next 12 years, you're off to building yourself real wealth. And that's the importance of every day reminding everyone what is happening. It's worth 6 minutes of my time. Not only that, by listening to this opening every day, it has me hyper-focused on a plan I'm already executing and have been executing now for years, right? We're seeing the progress taking place. This is just one, this was a late start for me. I began accumulating over to here, deploying this strategy, right? As just additional strategy. The beginning of the video, we talk about, listen, after you have the first strategy in place, you can then deploy multiple strategies across multiple different time frames. Good morning, everyone. Right? Good morning, everyone. I don't use BlockFi, for the yield. I'm not in this for the yield. I'm in this for the returns. When we do our math, we're using something like 70% annually. It's ridiculously low historically for Bitcoin and for what I believe we're going to see, take place over the next 12 years on Bitcoin, right? Especially from where we are over the next, 5 months or so, looking at a potential, 7, 8, 9x. That's the sweet spot right there. Some people might be looking for a 4x from here. And as time goes by, soon enough, as we do break out from the most important trend line in crypto, as we do take out the new all-time highs, then all of a sudden you are looking at things like 4x left and then eventually a 3x. Nevertheless, it is what it is. You got to get started today, in my opinion. You have to start by understanding where you need to focus your time and your efforts and researching and learning. And if it's, just getting caught up in random stuff, I hope to bring it back with you each and every morning. Bears over here, we've talked about this many times. We talked about that. We have a lot to talk about today. This is going to be it's going to feel like a Friday episode in a sense, in the length. So I hope you have an extra cup of coffee. I wish I had an extra cup of coffee here, but we got a lot to cover together. Let's get into it. I want to pull up the bearish case for Bitcoin to start, right? The reason I'm pulling up the bearish case for Bitcoin is we've entered the circle. This circle was the place that the bears need to, make their last stand. It's like the Alamo for the bears over here. If they lose this line, the most important line in crypto, chances are that the low is in, the mid-cycle low, the golden ratio, big shout out to Misconfig, has held. And then all of a sudden, we're going to be gaining massive momentum, towards that new all-time high. And that, will we come back and retest the breakout when we break out? In the past 2 cycles we have. Whether or not we do this time, I don't know. We will find out. But we're in this area right now coming into this resistance for the bulls, which is support for the bears if they're selling. And they could really manage their risk. Once you break this trend line, and we're going to keep this trend line now. For days I've been saying, as it's developing, I don't know if this is the trend line to use. This line over here from our original touch, as long as the bulls hold this, they have the opportunity to break out the most important trend line in crypto, right? The bears, they're running out of time. If they're able to go ahead and break inside this trend line over here, then that's when the bear signal, entry signal occurs. They manage their risk, and that's their opportunity to push, to test these yearly lows. We'll see. They might be successful, and if they're successful, you should see a pretty sharp move back down after a sharp move back up, right? Now, if they're not successful, maybe they never even get a break of the line. That's easy town all day long, right? But maybe they break the line and there's no follow through and we start consolidating below resistance. That's bullish. If we start seeing that type of price behavior occur, that would be bullish, right? The bears just don't have much in them. Consolidating below resistance in an uber massively bull market like this, we all know for many reasons, and it's just history going back to when we pointed it out on this channel at the points when that's been bullish. That will be bullish in this case. Bearish case is they're able to take it down back towards this area of 32,000, and then we'll see and then maybe break below and make another leg down. So it's the ball's in their court. It's their time. The bullish case for Bitcoin remains, and that's as it approaches breaking out of the descending triangle. First CTM repair, right where my mouse is, on June the 28th. Since then, that has held. It's been successful. You could get many stop outs. In this case, the first repair seems to be holding. And then we saw the descending wedge develop, and then boom, exactly as we were looking. Are we going to get the continuation out over here? That looks like a V. That's quick and that's sharp. We'll see. obviously at this point, everyone knows we do not know what's going to happen. We cannot predict the future in any way, shape, or form. But we have our model over here, and we're well within, as Ted put it, well within the range of the model over here. And you're seeing price behavior, if this is the mid-cycle low, emulating, right? It's very similar. It's eerily similar how this happened in the past. We have Ian really laying it out for us. Here we go. Ian is showing us two things. This is the mid-cycle dip lined up with the 2012 cycle, right? Now going into them, they were pretty similar. You know, a lot of people are saying, well, this current cycle looks a lot like the 2013 bull market with the double wave, and then price is also coming out as it did in that 2013, right? But Jerome Powell mentioned liftoff a couple of times yesterday during the press conference. It's like the new buzzword they're trying to get out there, like liftoff. So you're going to start hearing that a lot more often. But, you know, it was the work we were doing with the CTM modeling crew. Ian started coining this term liftoff like 6 months ago. So don't get confused. It's Powell sitting in on our calls and then taking our terms over here. And we're looking for that liftoff period next. We'll talk a lot about more of that blah, 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 blah. We'll talk a lot more about that today and in many days in the coming future as we approach this possible 35-day event to the cycle peak. We'll be watching that. And then also you have the 2017 bull market lining them up from the cycle low, and price is also, you know, really similar to the trajectory out of there as well, right? Now coming in, you know, well, they did match each other a lot, Ian pointed out over here. They were almost exact symmetry for this period over here, this 30-day period. Coming out, they continue to match. Now that we're not trying to say that we believe price is going to match to the day, to the block, what happened in the past. We're just saying, no, this gives us a new data point. We now have, you know, we had two data points, the 2012 cycle, then we have the 2016 cycle, and now the 2020 cycle is developing and playing out, right? Now we have our most probable path, right? The one that is the darkest green. It's actually above the 2016 cycle in blue over here. And you can see that this is the sweet spot zone when we're looking for this cycle to peak out, right? And the price range we're looking for it to peak out. What we're trying to do here is not so much predict the future as give ourselves the most accurate guide in order to ride these waves with the greatest accuracy. Yeah, it's beautiful stuff. Ted, I always revert back to this one. I just, the color scheme is a little bit different and it's much more appealing to me. I'm trying to get, you know, to edit this one to get them to match. Hopefully I could do that soon. Alan Au, you're bringing up the FOMC, right? The Fed chair's Powell is more dovish than most have expected. This is yesterday's meeting. As the unemployment rate, this is signal, listen up everyone. This is something we've talked about here for a long time and going back for a long time, right? Going back over a year. As unemployment rate rather than inflation is his only reason for thinking about tapering and hiking rates. Over the last 45 days or so, or 2 months, the conversation has changed that the Fed is getting ready to taper and hike, right? And we have said here, there's the possibility the market could force the Fed to hike, right? But most likely, they're going to pivot to the unemployment rate, which is never coming back to normal. They're never going to be able to return to normalization, right? That's something we basically said, like, the market's wrong. We're following price thing on the right side of the trade. The narrative is wrong. And this is what, you know, this is what is going to happen, right? And then we're seeing that play out now in real time. Let's take a look at it a little bit further. This is, by the way, over here, this is people continuing to receive government assistance, rising now over here. What's going to happen next month? Next month is September. Lots of people go back to work. Lots of teachers go back to work. School is starting. Are we going to see this number drop off drastically and quickly? Or is this going to continue to rise as more and more people continue to be on the government dole, right? Here you go. This is a good one to see, you know, how many people are receiving emergency assistance right now, right? Now, we could see a sharp drop, you know, in the future, and this could return to normal, and then the Fed could raise rates and start tapering, pull away the QE, right? I mean, I guess in a perfect world, do you ever think that these people are returning to work? Or do you think that the whole agenda from the beginning was to get as many people possible on universal basic income? Because if you rewind and follow the conversation on CTM back in March 2020, back in April 2020, the Fed's response, and the ensuing game theory that we played out from it, we were saying here that, listen, what's going to happen is that the end result of this pandemic is going to be that many businesses are destroyed forever and many people are on universal basic income, right? Is that what is this continued signal? Or do we see, anyway, you got to pay attention. Some people don't like that, but again, you have to follow and consult those who have a history of being correct, right? A lot of people changing their stories all the time, every couple and few months, change it. And it's good. The more data you're presented with, you should be open to changing your mind always. But at the same time, you have to follow and see, wait, listen, it's been back tested a lot. Anyway, I digress, and I'm going to move forward. I'm going to move on. If you're new here, welcome. And if you're not, welcome back. If you're looking at these two charts that Ian is presenting to us, the 2016 and 2012, specifically the bull market portions, and as we are, and indeed, if we are, the mid-cycle low is in, we're going to know that a lot clearer once we break the most important trend line in crypto, or with a lot more certainty, I should say. And then we begin tracking, into the stretch, from the mid-cycle dip into the home stretch. As it is, each cycle is uniquely different. There's no question about that. They're all, but as they come into from the mid-cycle dip, from the low of the mid-cycle dip into the peak, they really, there's a lot of similarities between these two. And you could see them playing out over here. Will that play out again? Well, we have no idea. We just have to keep watching. It's something we've been watching for months, planning out, pivoting to, moving over. And you could see that, since then, that red line has jumped up here, and it is playing out again. So if you're not consulting it, I think that you're just leaving off what could perhaps be an extremely accurate variable, right? CTM modeling over on the Discord. Jesse added to the team over here. Could you look at this? Look at the emoji play over here and the amount of love. Jesse presenting this on Twitter. I read this right away, and it said authorized by CTM modeling team for release. I knew it had the goods. That's the stamp of approval right there. Thank you, Ted. Thank you, Ian. And Jesse pointing out, he's like, listen, here it is, the prettiest chart in the room. Finally authorized, shout out, their vision through my lens, right? This is their vision through my lens. Everything that CTM is putting together, here's how I am putting down my artwork, right? CTM all day long. And what Jesse's showing us, he's lining everything up from that mid-cycle low, or what we perceive to be the mid-cycle low so far, right? Jesse watching this for quite a long time coming into this event, right? And then he's also lining up, the 2017 Ethereum fractal, lining up its mid-cycle low from last cycle, and then its current mid-cycle low as well. And you could see also that edge for the Ethereum. I was going to call them users, but yeah, Ethereum users. Here's the cheat sheet for you, and it's interesting. And if price does maintain within this range over here, it's just giving us another variable for the future cycle to say this is really the sweet spot. This is our expectations. And anyway, thank you, Jesse, for all your continued hard work over here. Ted has gotten the new chart out. This is in the Bitcoin cycle modeling thread on the Discord. If you're not on the Discord, if you're not with us working together, CTM, I highly encourage you. There's a link in the description below for the program, for the course. Do it. Do it or work towards doing it. You got to get there. There's no question about that. A lot of people have been changing their price predictions over the last week, right? A lot of people were talking go back 2 weeks ago and everyone was changing their price predictions, taking down their expected price targets of Bitcoin drastically, pushing forward when they think the peak of Bitcoin was going to be into 2022. And then like their downside targets for this like quote unquote bear market they said we were in started going down way lower, right? I reiterated during that time, my price target has not changed. 2 weeks ago, I put out the video showing that and why everything remains the same. We'll see. And this was what it looked like, right? Comparing the cycles from the halving event. This is Ted's artwork, a different view. And people were wondering what's going on. I was viewing this differently. I was viewing the correction over here. I put in the most important trend line in crypto almost 2 months ago and was just waiting for that thing to break over the last couple of weeks, pointing out, especially the last week or so, pointing like the risk is beginning to be to the upside. And the bull of all bulls looks like she's getting ready to run. And now we're on the verge of that breakout. You can see that breakout mid-cycle has occurred in the previous 2 cycles around this previous time. And the best way to line it up is from price and price alone. What do I mean by that? I mean, the best way to line this up is not from how many days past the halving, not how many days past the all-time high. You want to consider all those things, not from the bottom. But at this point, it's lining them up from when they break the most important trend line in crypto. And that's another thing, by the way, CTM modeling crew, what we want to do. Let me see if I could pull up. There it is. What we want to do, right, is let me highlight this for everyone over here so they could see. By the way, light on likes. If you have a moment and you really want to help out the channel, go ahead and just like reposition yourself and destroy that like button. Focused in on what was the most important trend line in crypto, and now the most important trend line in crypto. You got to line these things up going forward. From the bottom of the mid-cycle low, Ian is giving us that accuracy coming out of it. And then from where they break out, right? I'm looking at the return from where they break out to that cycle peak. 11x here in 2013 from where it broke out to that cycle peak. It's a little different in 2016 cycle. When I say it's a little different, I mean, look, it was a little bit less. It was, instead of an 11x, you had a 7x. And now 7x is quite substantial. It's really nice. When I say that this cycle continues to be an average of the two, let's check that out a different way. Let me zoom out, and I'm showing you from the halving, right, up until if we break out over here. I don't know if we break out here. I don't know if we break down out over here. I don't know when we're going to break out. I can't predict the future. I haven't gotten that part down. But if you look at from, potentially breaking out over here, that's a 400% return, a 4x, right? Now, if you go back and you looked at what happened in 2017, that's not, it's a hold on one second. That's right. It's a 270% return. You could see this cycle is outperforming into the breakout, into the most important trend line in crypto. The current cycle, continues to outperform this current cycle. It leads me to believe that we're going to be looking at, from breaking out of the most important trend line in crypto into the cycle peak, a greater than a 7x return. Probably less than an 11x in the first one. It puts me somewhere around the sweet spot being what I believe is going to be an 8x, a 7 to 9x, return from just breaking out the most important trend line into the cycle peak. And it's just another indication. It's just another viewpoint to say the math that we've done and done so many different ways to put us in the sweet spot, or to view it over here, to put us in the sweet spot right over here as well, right? When you have all these different, lining it up different ways and just getting all these confirmations, it does give you that confidence that you need. A lot of people say, Jordan, I've been following CTM for over a year. I already have the plan in place. I know what's going on. I follow you every day, to be along on the journey with you, right? There's no moving pieces that are taking place. I put those pieces into motion already. And because, you know what? Riding the bull of all bulls is tough at times. And during those tough times, you give me that calmness and that clarity to go ahead and make sure that I could continue to move forward, and that's CTM all day long in so many different ways, right? So the Fed is catching up to us, right? Acknowledging inflation is running hot. and hotter than they expected. It's funny for how long they could be like, no, it's going to be transitory, not a big deal at all. We want it. And then when it's not going to happen. And then when it happens, they just change their tune and they're like, yep, yeah, the inflation, it's not the inflation we were looking for. It's different inflation. And we hope it goes away. That's what they're telling us. You got to consult those with a history of being right. And more importantly, you have to make your own decisions, right? So what else are we looking at today? We got more. Ian's chart over here, Ethereum, Bitcoin. You could see, listen, it's not an exact match of what happened at this point cycle, right? You could see that this current Ethereum is a little bit stronger coming out, but we're making lower lows, a series of lower lows this portion of cycle, and that continues. The trend is down. I would say that they are closely matching. I am interested to see what happens over the next 60 days or so, coming into liftoff around that area, and to see if that's when Ethereum breaks out to the upside and the peak of second alt season, right? Bitcoin being Bitcoin. I like what I'm seeing all around. I definitely feel I feel very firm in our analysis mid-cycle. This is, right, how it all started. I pointed this out to you. This is how it's going. Let's see if that continues or not. Obviously, if you saw all the work that we did on CTM going back into the first 2 weeks of April, if you saw, we were talking about get ready for the melt your face off move, prepare yourself, watch out for a shakeout, a mid-cycle shakeout, right? It normally occurs around this time, right? And then boom, price started ripping up, and it was, well, you have to be positioned to the upside, but 58,500, you're dead wrong if you're still fully leveraged, right? And then it was finally get neutral, get aside, and we've been waiting and waiting, and now coming on the attack again. What was I had something in my mind that I was building up to and leading up to, and I lost it, so I'm just gonna have to move on. I'll come back and watch the tape, and we'll figure that one out for tomorrow. The one thing that is slightly worrying to me, right, is that everyone's going to know about the cycles. Then what? It becomes a lot less relevant. When you guys leave comments on the YouTube videos after the fact during the live streams, I go back and I read them. They mean a lot to me, and I try to respond to the ones that I'm able to, the ones that are going to help, a lot of other people in different ways, So listen, this time around though, this current year, a lot of people knew about the 4-year cycle and know about the 4-year cycle. There's no question about it. And you could see mid-cycle, even, with that knowledge available to a lot of people, how many people either, number one, choose to not believe in it, they don't understand it, or they just don't see it. At the end of the day, you're looking at human behavior and the emotions involved along coded monetary policy. This cycle has proven to me with how many people understood, had the 4-year cycle presented to them, and still just didn't get it for whatever reason, that it's so early that these behaviors are going to continue to play out. Don't forget, even some of the people that were like 4-year cycle proponents, right? It was Willie Woo a couple of weeks ago on the POM podcast with William, who was like, the 4-year cycle is broken. From here, Bitcoin does a random walk to $1 million. I guess random walk means that there's no way to predict what these waves are going to be. But like we're working towards $1 million from here, right? So there are people that, in my view, capitulated, and there are people who held strong and understood it. The year of the bull continues to put out solid information. The root, we got a CTM all day long. By the way, I have to follow up with you on this, right? I mentioned this the day before yesterday's video. Someday I hope to sit down with you and tell you how much appreciation and love I have for you for helping me to show me a path that led me to a life of freedom, emotionally, financially, intellectually, physically, spiritually. I learned more from you in the past year than I have in the past 10 years. And can you imagine the heart here that is so willing to give it in return? Is so willing to give. I mean, this is CTM all day long. And, listen, it is, if you go back to the about section on the YouTube channel, when I first created it, October, right? We started going live daily together, October. late October 2019. And in the about section, I said, listen, ultimately I want to help as many people around the world as possible. That's the goal here. That's why in the beginning I have the video I have. That video is going to help as many people as I could affect in the world understand what they need to consider, the strategy they need to put in place in order to do absolutely legendary things with their life. And then in return are going to touch so many lives around them that it's absolutely ridiculous. That's how you make an impact in the world. That's how you change the world. And everyone on their own and in their own way, when you have or have reached a place of financial stability, not only that, abundance, you're then able to really help and transform a lot of other people's lives. There's no question about that. So CTM strong, not today. We're not going to be looking at this. Always a big shout out to the halving tracker, really helping us see this and continue to help our growth as we continue going forward. All right. I wanted to talk about that. I talked about mid-cycle, the difference. Remember, as we were just in the descending wedge, this current cycle was matching the return of last cycle as it was breaking out of the most important trend line in crypto. It's just another way for everyone to see the strength of this current cycle and that we are not seeing diminishing returns in any way you look at it, right? So, yeah. Listen, I'm just trying to help as many people as you either see it or you don't. All right. What else? Brad's model. I need to play with this and get this right because as we get towards that really mania move over here, this is really giving us the potential to really get the most accurate potential price target we could get. I'll be coming back to that in the days and weeks ahead. Again, big, lots of love and shout out to Ian and to Ted. Really grateful. And every one of you. So CTM is strong in so many different ways. And right now, as I'm saying this to you, so many names, Jan, pop into my mind. So many people give so much each and every day to make this experience as best as possible for all of us, changing lives. The moderators, thank you for for everything, for being the foundation of this all, for giving so freely of yourself. Heath, right? Brandon, Alan Au, so many, Giles, so many of Gene, like I can't even, it's too many names. So I'm grateful for it. You're the bull, always keeping this on the screen as an open tab over here, just pointing out, with detailed what's taking place during these cycles, right? And we're going to be hitting that greed period. And that greed period, by the way, if your timing is off, this is where all the potential is. I love fast moving markets. I thrive in fast moving markets. I have taught myself to have the patience of an apex predator though, because very seldom a market's moving fast, right? You all saw how I reacted back during the crisis, end of February and into March of 2020. I thrive when price is moving fast, but most of the time price is not. You have to change your time preference. So when we get back towards that, right now though, we're towards this massive bear trap, right? And the bears got trapped, right? We haven't yet had any type of capitulation, and the previous cycles did have a capitulation mid-cycle. It's possible that we have some type of event like that. The bears defend over here, push us down. I mean, the model is kind of pointing out that's probable that, that we come back down and we're testing a lower. That's the probable base case in this area over here. Well, but we could come down even lower, right? And break down lower. And if we break down lower, maybe we'll have the capitulation. My thought though was that, listen, this has done its job. Many bears got trapped over here. You saw a lot of retail, they became so bearish, it was ridiculous. I couldn't do it. I held the line. I remained, riding on the bull of all bulls because I understand, or I believe with a high degree of confidence, that I have a real good feel for riding her, and even with all of that, obstruction and darkness and disinformation all over the interweb, I did my best to be a true captain and hold firm, and continuing at that point pushing as hard as I can, all different possible theories that could break my own. You saw me doing it. You saw me doing it with lengthening cycles, the possibility of shorter cycles, right? You can't give up on the bullish case for Bitcoin, right? So anyway, here we are moving forward. What do we got? Jordan, take a breath. Tom. Yeah, let's talk about this. Is a great conversation. Jordan, I don't mean to be a contrarian, but in my opinion, the model is a red herring. There are too many loose variables and biases trying to line things up. Could you imagine how difficult it is to try to line up the things that that's why I have so much respect for Ted and Ian and everyone contributing, and who they're working through and how it's all coming together. Then, they also create narratives that are a distraction. The modeling is not going to help us exit the bull cycle with precision. Letting go of predicting cycle fluctuations, comparing number of days from this day or that price target and peak dates. I'm way more focused on studying the past cycles on-chain analytics and rehearsing those situations where there's a confluence of indicators and metrics that best describe the price action and market behavior at prior peaks in real time. When I overlay the different scenarios, what impresses me, this is big signal over here, is that price can move 2 to 3x in 2 weeks at the peak. And we're in the red zone for the R hodl. We don't want to just sell as we enter Tom is teaching himself here right now. We don't want to sell just as we enter the R hodl red zone. On-chain metrics and tested indicators, high probability top sell signals. We're going to run out of time this is important too. We're going to run out of time if we don't have this rehearsed and ready to go in September. And it's really important right now to be preparing for that exit. It's critically important to be preparing for. Cheers, Tom. Your rock solid plan of the pi cycle with the red hodl as a main considerations have been clearly laid out. Yep, price could 2 to 3x in a short time frame is also an excellent indicator. Price jumping our yellow line of the log charts will set that move off. That's why it's so important, the work that Brad did, the work that we did with Patrick in beginning of January, and Will and everyone else in doing our CTM. Our CTM, there's Enrico posted something on Twitter yesterday that I had set up over here that I really wanted to talk about. I haven't seen it yet. I hope I could find it. I really want to go through that with you before we do. What was I just talking about? Could someone remind me in real time what the last thing I just said so I could go back to that thought and not relying on anyone else. I'll keep moving forward until it comes back, right? Oh, yeah. Boom. So, the work that we did with the log scale, trend line resistance, and here's that yellow line Tom's talking about, right? I'm trying to highlight it and make it thicker. There we go, style. Let me just highlight that for you, and you can see that line over here, right? Once we break above this line on the upside, that's when this is unfolding, and we're within that last window of that cycle peak. That's the mania, the blow off top, the greed phase happening over here, right? We're watching that line closely. I think it's Scotty, and I'm not exactly sure. I was looking through all the messages, direct messages on Twitter yesterday, trying to find out also who highlighted these and gave me I went back and I said, look, the log scales resistant lines that I put out here in January are matching his, and he gave us that schismatic of coming out of there towards the top. Very important stuff, Tom, right? Brad's model also includes this mid-channel jump, right? That's why I want to focus right now on Brad's work as we come into this later phase, as we're exiting the mid-cycle. It's been we're mid-cycle, and that's about to end as we break the most important trend line in crypto, and we're no longer mid-cycle. We're now entering the latter part of the cycle, and a lot of work needs to be done right now. When I look at this from multiple angles and slices all the time, an advantage is that our expectations are no longer September or even October, right? Tom was like, we got to be ready by September. Well, our expectations now, because we're lining this up from the mid-cycle low right? That we're looking at peaking in December, which happens to be where the past bull markets has also peaked, right? The last day of November, into mid December, and that seems to be lining up again, right? We just don't know, but believe monitoring from all viewpoints provides a big edge, right? And Tom, by the way, we went over in that video, right? This is a beautiful video. This is Bitcoin risk to the upside at the 29-minute mark. If anyone wants to take a look for it, I could actually share this link right here in the chat right now. And this explains why we're in the beginning. One of the first things we did is point out that the cycle's not peaking until we see the R hodl, in that red zone. And Tom is, I'm going back to basics and I'm sticking with just that. And I'm looking for that pi cycle top indicator when we have that cross with this is like my greatest exit signal that I'm focused in on. And again, that was highly affirmed, and that's for a great way to do it. We're just looking for that, from all different points. Tom, right? Of course, I agree with looking at that and hearing all perspectives. I'm watching the look into Bitcoin on-chain analytics, but let me jump down. Tom says over here, listen, maybe adding a short section each week to go through the on-chain analytics and zoom in when price is in critical areas, is a good idea. And we have Alan Au providing that weekly, right? Alan Au. And you know what? You're right. Alan, you should do this on the live stream, once a week or once every other week, certainly once a month until we get closer to the peak, because it's all on-chain analytics had confirmed this whole time that we were mid-cycle. And that's the edge of having Alan, put out these amazing threads and this work that he does from multiple different vantage points and angles, showing the CTM, showing his strength, adding it to CTM's collective knowledge, and I try to retweet every single one, retweet and like all the time when he sends these out, because I want as many eyeballs on as possible. And, obviously everyone knows that I'm more focused on price rather than on-chain analytics. Price has helped me to see everything. But we want to provide that information from everyone. So that would be awesome. Right? That's right. I think I'm looking for, there was a tweet. I wish I could find it. I don't have it. It was really important to me because it was from Enrico. And he was talking about what he's seeing and how CTM has helped him put together the way that he sees everything. And it's beautiful. And I'm sorry for that. I thought I had that up here, Enrico. I'll do that tomorrow. It was really good stuff. I want to make sure that everyone in the community gets to see what he's put together. And I could see that a lot. No, that's Jesse doing it. All right, everyone. I'm going to play a little bit of Honeymoon over here and then see if there's anything else that we need to close this out with. Gino, I would do a collaboration with anyone. I love to talk about the markets. I love to talk about Bitcoin, and I love to help, educate as many people as possible. I would never not collaborate with someone. That's for sure. Listen, a couple of things. Bobby, this is a good one. The compound calculator does not include reaccumulation at the bear market low. We talk about in the beginning of the intro video, like this is foundational. You need to have this in place before anything else, and then you could move on to different types of strategies, right? Including perhaps, I tried to talk about it today with you and let you know that it wasn't just like $52,850, right? And then, just like no, 1 year where we're looking at from going forward into the peak over here. Are we looking at that 8x? Potentially, I think it could happen, right? But it's not $52,000. It's now, because we're mid-cycle, $260,000, right? So but you got to pay taxes. Let's just call it $1 million at the end, right? Let's always underestimate, right? And then you're looking at, going forward, that 70% return, always underestimating it. By the way, $1 million is after taxes. Now able to buy back in at that low. I'm sitting at that drawdown more or less. Although, Uncle Sam, the government, he got my drawdown. That's where that drawdown is coming from, right? But buying back in at the bear market low, I'm going to be accumulating more Bitcoin moving forward. So my rate of return is going to be greater than what the average compounding annual rate of return is. And whatever that is, I mean, it's probably going to be something, around 120, or better over the next 5 years. I expect if you're, timing that, obviously you can make that much greater. Whatever, like it doesn't need, I don't even need to put in like the numbers, just use 70%. Just assume that you're holding Bitcoin, just use 70%, run the numbers, and then all of a sudden, is this possible? Well, what are you doing and what's your plan? What are your goals and what are you looking to achieve? And what are you going to achieve over the next 12 years? That's the bottom line, because the 12 years, they're going to come and they're going to go. And someone who's starting from the bottom, with $3,000 and they're doing whatever they can to continue that road, like either way, they still have the potential to do life-changing things and therefore life-changing things for other people. Steven, the baby's doing amazing. He's such a good sleeper. What a blessing. His baptism's tomorrow. So there's the slight possibility that we have more visitors coming in right now, that we don't have the live stream tomorrow, but that's doubtful. Most likely I'll be here with you all to check in, to say hi, before the weekend. Check in what's going on, at least with the price action, making sure that we are maintaining the clarity that we need at these important junctures over here. He's doing very well. Thank you very much. And then Fabian's wondering about, look, I don't really agree with looking at Ethereum, Bitcoin, right? It's not look, Fabian, it's not a model trying to predict the future. Let's pull it up over here. I'm trying to get to the beautiful work of Ian, right? I'll get to it. Got a lot of small tabs over here. I'll clean that up. Where are you, Ian? The beautiful work of Ian is here. It is. This is not, Fabian, just a couple of things for clarity. This is not a model trying to predict what happens in the future. This is showing you what has happened up until this particular day. It can't be wrong. It's just reflecting price, right? There's nothing wrong about it. It's just reflecting price. Now, this model and a variation in my own head that I believe helped Ian, see this and illustrate this artwork was that, the reason back in 2019 that I was able to say, listen, after the halving in May of 2020, that approximately 6 months later, alt season's going to begin, is because of me consulting past cycles. And it's what happened again. And that's why in November and December, I'm like, here, alt season starting now. And it's the reason right before we peaked over here in this first alt season, that same week, 4 days before it happened, that I said to you all, hey, listen, I don't know, but watch out for a site for alt season peak right here, right now. And it happened 4 days later, right? So, is my expectation that Bitcoin outperforms during this particular portion of the cycle? Yes, it is. Why? That's what's happened in the past. And things continue to play out as such. It doesn't mean that it can't break. And it's very clear if it's breaking what that looks like. We have this like very simple triangle over here. If the price of Ethereum versus Bitcoin breaks out to the upside, then then the model's different. But there's no breaking, right? Or don't stop looking for the model to break. For it's holding for so long. Why are you looking for it to break? Why don't you just wait for it to break and then trade accordingly? That's the part that I don't understand for a lot of people, is that they're like, well, the model can't hold. The model's Well, when it does, that's an easy vantage point for you to manage your risk around, because you know where the model breaks. You now then could take the other side of the trade comfortably, knowing where you're wrong again. So, what else? Dollar, right? Raquel, the dollar. Let's take a look at it, right? Breaking down below the 92, and we have what's setting up over here. All right, let me gather my thoughts. First one, clearly, we're having what we called would be a failure of this breakout of the head and shoulders pattern, the inverse head and shoulders pattern. Here's the neckline, breakout. And now we came in and we are breaking below the 92 support. It's the horizontal support that I said if we break below that, at that point, that is a failed breakout. And then, while we are more neutral now and remain neutral in this area, right? Definitely, this is a failure. This could lead to not only a test of the lows. If we break down, then we know we're going down much lower for a new leg down. Let me look at one thing though with you. What did I want? Oh yeah, this is what I'm focused in on now. If price is able to bounce from here, right, after making that lower low, that lower swing low now, if price and when price bounces, that's going to give us a nice place to put up a nice trend line. If it's here or if it's a little bit lower, wherever that is, I'll leave it here for now, right? But someone remind me to move that. And then a break of that trend line, that's really going to sell off the selling momentum. That's when it's confirmed. So we're getting close now where we're lining up after making that lower swing low over here. We're lining up when the confirmation of that, what's the opposite of repair? Breakdown. We're lining up that next breakdown to come. But now you got to be patient. You have to watch as things are unfolding. And now is the time to be that predator on the, out on the savannah, lining up your prey. You see the weakness, right? You just don't run and attack and scatter the herd. No, you have to wait now until she's lined up correctly, a little separated, and then you get the signal, and then you pounce, conquering the markets all day long. Listen, it's all free. Everything we do here, it's all free, and it's done with lots of love, right? Many people to say thank you, because many people have achieved life-changing things, already here with CTM, whether they've been here for however long they've been here. Well, it's not myself, and it's not like a handful of people. There are many, the amount of emails, notes, letters that I have received is, I share many of them with my wife. There are many and many and many, and I want to make many more, right? I want to look back, whether it's a year from now, 4 years from now, and a decade or now, and 12 years from now, and be like, we had an impact over here that, it started off with this little ripple, people smashing the like button to help this channel. And all of a sudden, we have gone ahead and helped change the world. Have a beautiful day, everyone. I'll see you all most likely and hopefully tomorrow. All right, everyone. God bless you. I'll talk to you soon.
The best thing to do is if you're not gonna hold it for 4 years, don't buy it at all. Because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever. And if you can't be forever, look out 10 years.
And better 12 years. Better 12 years because then you get 3 halving events and another bull market.
Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules and
CTM all day long.